Gracias por acompañarnos. No sé si queda gente fuera todavía por entrar, pero vamos a continuar con la siguiente mesa de debate. Por deferencia también a algunos de los ponentes que nos acompañan, voy a hacer una breve presentación en inglés. Esta mesa la hemos llamado El rol de los fondos soberanos. Now we'll have the next round table, the role of sovereign wealth funds as financial actors in the global economy. This panel will address how sovereign wealth funds have become essential players in the investment landscape, the relevance of the funds in the current global context, and new international investment trends. The moderator will be Mrs. Elisa García, and will have the participation of, Elisa, when you want, the participation of Javier Capapé, Director of Sovereign Wealth Research Center, IE University. Perfecto. Javier, when you want, also. Duncan Bonfield, Chief Executive of the International Forum of Sovereign Wealth Funds. Duncan, when you want, please. And Isabelle Bébéar, Director of International and European Affairs of BPA France. Now we'll take a picture. Okay. And you can start when you want.
Good morning, everyone, and thank you once again for being here today at COFIDES Investors Day. I'm Elisa García, Executive Director in Invest in Spain division in IFSWF, our trade and promotion agency, and we are in charge of attracting foreign investment to Spain, to our country. We are not a financial institution, but we are a one-stop shop that works shoulder to shoulder with our investors during all the decision-making process before closing an investment. The sovereign wealth fund have become an essential player in the investment arena nowadays, and today in the discussion panel we'll address the relevance of those entities in the current global context and new international investment trends. We will talk too about their stabilizing role thanks to the implementation of long-term investment strategies. I'm sure that we will have a very stimulating conversation with our three panelists. First of all, I would like to start with you, Duncan. Duncan Bonfield is Chief Executive at the International Forum of Sovereign Wealth Funds. Prior to joining the forum, Duncan was Group Director for Corporate Communications at Land Security, the United Kingdom's biggest listed property company, and previously he was Corporate Affairs Director for BEA, the company that owned Heathrow, Gatwick, and Stansted airports. Duncan has a bachelor's degree in politics from Bristol University. The International Forum of Sovereign Wealth Fund is a voluntary organization of those entities, and it was created in 2009. Good morning, Duncan.
Hello.
Thank you for joining us this morning, and I would like to start by asking you, what is the purpose of this forum that you are managing?
Well, it was created by sovereign wealth funds together with the IMF and also with the involvement of US Treasury to show that sovereign wealth funds invested for financial return. And to do that, it created 24 principles, the Santiago principles of transparency and good governance. And all our members, they sign up to the Santiago principles with the aim of implementing them in their investment funds. So we started as solely focused on governance and strong governance for sovereign wealth funds, and that's hugely important, and it remains so today. But over the years, we've evolved And now we also help sovereign wealth funds share knowledge between themselves so that they can improve their investment and their investment returns. And we do that through a series of means, including data and research, but also through networking. So it's been a challenge, obviously, with COVID and the pandemic, not being able to meet. So thank you very much to Jose Luis and Rodrigo for having this event today. And it's great to see people in person again. So networking is important because increasingly we're seeing sovereign wealth funds collaborate, cooperate, and co-invest. And again, Rodrigo mentioned that in his opening, and I'll maybe talk a bit about that. But that's the purpose, and we also represent sovereign wealth funds collectively, and primarily, as I say, through our data and research, that we show what sovereign wealth funds are actually investing in, what are they doing, rather than what people think they might be doing. So again, it's about trying to bring some transparency to that world.
Thank you, Duncan. Our second panelist, Isabelle Bébéar, is director at International and European Affairs at BPI France. And since 2001, Isabelle oversees relations with European and international institutions and partnership with sovereign wealth funds and long-term investors. She's also a director of Proparco, and has a responsibility in different financial institutions in the world. BPI France is France's public development bank in charge of financing companies from seed to listing, having as mission to stimulate French business growth. It has recently developed a different partnership with sovereign wealth funds to jointly invest in French companies at all stages of development. Good morning, Isabelle. It's a pleasure having you participating in this morning discussion. It would be very interesting for all of us to hear from you why a financial institution as a BPI started to co-invest with sovereign wealth funds from different countries. Why did you make that move?
Thank you. First of all, thank you for inviting me, and I'm happy, like Duncan, to participate to an in-person event. In fact, we began this activity 4 years ago because we wanted to attract money from foreign countries to co-invest with us in France, not only to have more money in France, even if it's an important point, but because we think that working with sovereign wealth funds, so professional institutions, it's really an opportunity for French companies to develop themselves abroad. That's true, and for example, we work a lot with Mubadala, and that's true that Mubadala can, when they invest in a PE fund or when they invest in a company, always with us, they can open the doors to a French company when they go, for example, to the US, because Mubadala is well implemented in the US, or when they go in the Gulf, etc. So it's for us, it's really a strength. And of course, there is knowing each other. It's a way to exchange but good practices, etc. But that's true that it opens a lot of doors abroad, and that's one of our objective is to give support to French companies to go abroad.
Thank you. Our third panelist is Javier Capapé, Director of the Sovereign Wealth Research Program at the IE Center of the Governments of Exchange, and an Associate Professor at IE University, where he teaches public economics, industrial organization and strategy, and history of economic thought. Javier Capapé earned his PhD from ESADE Business School and the University of Illinois. Professor Capapé has been a consultant at the United Nations Environment Program on sovereign wealth funds and sustainable development goals. Since 2012, he is a sovereign research affiliate at the Fletcher School and co-editor of the Sovereign Wealth Funds Report series, an initiative backed by IFSWF that we have been producing already for 10 years. Good morning, Javier, and thank you for being here today. In your activity as a researcher, how difficult is it to track the activity of sovereign wealth funds all over the world?
Thank you, Elisa. Thank you, dear panelists and distinguished attendees. So, again, thanks to Rodrigo and José Luis for inviting me and having me here. It's hard, but at the same time, it's becoming easier. So, part of what the forum is doing since years now, it's facilitating best practices worldwide, and also the fact that sovereign wealth funds are co-investing more and more with international partners is facilitating them to, let's say, to access to standards that help in my work, right? I've been researching on sovereign wealth funds for 14 years. We have this center at the IE University. We produce this annual report. And something we can say is that more sovereign wealth funds are improving in transparency terms. So it's easier to track their investments. And I think another big, let's say, trend that has been like solidifying over time is the fact that sovereign wealth funds are more and more open, or let's say more inclined or better prepared to invest directly. So it's easier to track investments when you go directly and buy a portion of a company than when you go through a fund, right? It's more complex, it's more difficult, but sovereign wealth funds are getting all the capabilities needed. I mean, most of them, or even most of us may think that sovereign wealth funds are sometimes unsophisticated, they belong to the Ministry of Finance, and they just do some debt investing, but it's not the case. They are doing a lot of direct, and the more direct they get, the easier for us to track, because they get more visible when they invest. They are doing a lot in venture capital. They are doing a lot in partnership with private equity players. So we observe an easier way to track them because they are getting more exposed, and I think they are using they are able to do that basically because some of the older funds, some of the more, or let's say the largest funds, such as ADIA in Abu Dhabi, Kuwait, Qatar, and others, Norway, for instance, are doing things well, so that they are, let's say, creating this path that many others are joining today, more strategically, more domestically, but also internationally, partnering with one another, like as Duncan was mentioning before.
Thank you, Javier. Thank you all for your introductory remarks. And if you agree, we will dive deeper in the trends of these funds in their behavior. If you do not mind, Isabelle, I will start this time with you. From your side, and according to your experience at BPI, what are I would say, the investments that you are prioritizing, and according to which criteria?
As an investor, as a French investor, of course, our job is to support French companies to develop themselves, but also to go through the different crises, like COVID crisis, and now, unfortunately, the war of Ukraine, but other crises also. So that's the first point. But of course, we have some specificities, some main objectives. Of course, there is the problem of climate changes. So we have a climate plan. We have la Banque du Climat, the French Climate Bank. And we have a program to support French companies by investing, by making loans, by providing business support in order for them to become green. Even if at the beginning they are not green, we can invest in them, but they have to have a plan to become more green. That's our policy. That's one of our objectives. The other objective is the reindustrialization of France. always with green objectives, but that's true that over the years, France has lost a lot of jobs in the industry, and we have very bad figures in exportation for export trade. And of course, it's mainly based of the decline of our industry. So we have a specific also trends for industry. The objective is to develop industries in France, to help companies to relocalize in France, and also to innovate. And for that, we also have planned for deep tech, because we think that the deep tech will help France to be reindustrialized. We have a specific fund to invest dans des usines,
Industrial plant.
Exactly. In the past, they went to Asia and China to do that, and now we want them to develop their unit in France. And so we have a fund of 1 billion specifically now to invest in this kind of activity. And of course, we think that because we are not the less expensive, we have to be the more innovative if we want to win this international battle. And I think perhaps the last point is an objective of sovereignty, because we've seen with the COVID crisis and now with the war that unfortunately, mondialization is sometimes has a lot of disadvantage. So we want to become more independent in health, in tech, and in renewable energy.
Thank you. Duncan, Isabelle already introduced the idea of green investment. Do you think that we may talk about an asset recycling strategies from this sovereign wealth fund that goes from more traditional investment to investment related, linked to 2030 sustainable development goals?
Well, we've undoubtedly seen some of that. We've been tracking that for 6 years, something like that. And 6 years ago, it was very few sovereign wealth funds were really examining properly investment in climate-related, especially, investments. Fast forward now, and you will see that the majority of funds are actively looking at climate-related investment and have substantially grown the amount of money that they've invested in those areas. So there's undoubtedly already been a movement. I think the wider sustainable development goals and impact investing is not as advanced, but I think we'll see some acceleration of that over time. But I think there are other trends that play into sustainable investment. I mean, look at COFIDES, look at BPI, look at IFMAR of Morocco, funds such as these. What you can see is that governments are trying to make good the shortfall in investment so that they can help economies transition towards this new green economy. So you see a new policy development that has gone on and has taken rise there. In Ireland, there's a similar fund as well, which has got again, like BPI, has got a specific mandate. So you see governments have responded to that with how do we organise our capital? It may be locked up, but how do we deploy it better to make a shortfall? And then you also see governments, sovereign wealth funds investing domestically, which is a relatively new development compared to the old savings funds that had oil and gas reserves and the Norways of this world. And then you also see, I would suggest, increased collaboration and co-investment. And that's the idea I think about, and Isabelle's already mentioned it, where it's really about mutual aid, it's about de-risking projects, and it's about if you can get in certainly anywhere through the capital stack, as you can debt, equity, mezzanine finance, and if you can then unlock those areas, and in some cases can take a lower rate of return than the private sector can, that will unlock investments, and then it will attract in additional private capital. So you've seen all those trends and developments going across sovereign wealth funds. And whilst it's not all linked to sustainable investment, that is one of the key policy objectives of all these funds.
Thank you, Duncan. And one question, because for those funds, green is a must in their investment criteria. But do we have some recognized standards that are shared by all the entities that can tell us, well, this investment is sustainable or is not sustainable? Do you share some specific standards?
I mean, let me address that. That's one of the big challenges, undoubtedly, and it's and there's a lot of data, but it doesn't necessarily agree. There's a lot of work going on for it, but no, those universal standards, I would say, they're probably not far off. I mean, please come in here, but they're not fully developed yet, and I think we're still a couple of years away, if I'm honest about that. But there is a lot of work going into that. But you also see competing standards as well, and I think we know about all of that, and so I think it is going to be some time. Not least because a lot of the big asset managers, what they do is they have what's called a black box approach to their green investment, and they don't want to open the black box and share that data. So, but I think there's so much pressure that ultimately that will crumble and people will ultimately have to share, and there will be universal standards. But it can't come quickly enough. And then I think, as well as that, you have the challenge of a lack of a universal carbon market. But maybe that's for a separate discussion.
Thank you, Duncan. Javier, maybe you want to follow?
Yeah,
about,
definitely. Well, I think there are initiatives such as, for example, the One Planet Sovereign Wealth Funds, right? That you collaborate a lot at the forum. France is a member. So I believe this association of now, I think 15 sovereign wealth funds are following the same path that was initiated by the forum, which is about the standards and sharing governance. And I think the potential of sovereign wealth funds aligning to one standard can be huge, not only because they are super big, I mean, $10 trillion in assets under management, but also because of the relationship they have with their countries, right, with the country government. So they will facilitate the transition, or let's say, or the alignment in terms of standards or reporting to their own financial institutions in the same country. And that can generate this distraction that can expand into many others. And we just need to focus in a set of institutions and not going into every country around the globe. I mean, if we are able to agree, or let's say to find a compatible solution, that will be ideal. Because if you think in a sovereign wealth fund from Singapore, they want to invest in, 40 different jurisdictions, they cannot go into 40 different standards, right? So there is a big interest from global investors and asset managers to agree in some sort. And I think we are, as Duncan is saying, we are getting there. There is not, I also have been advising and helping a company that is like producing these kind of standards, let's say software that can receive any type of standard. It's getting closer to a small set of standards now than the huge variety we have only 3 years ago. And continuing on what you were saying about sustainability, I think the heterogeneity of the sovereign wealth fund industry also, let's say, is reflected in the different approaches they have on sustainability, right? So you have super sophisticated decarbonization strategies in some New Zealand fund. Then you have, let's say, delisting or divesting from certain companies in the case of Norway. And then you have many other intermediary, or let's say other approaches to it, which is basically why I'm not able to invest in this company and help this company to transform and to set a net zero path that is feasible, right? And I think we can also try to bring this capital to this impact, sustainability, ESG plus commitments that will generate this tremendous impact globally. We are working today, with the forum on a project basically to bring sovereign wealth funds that are able to deploy capital internationally to those sovereign wealth funds that are, let's say, promoting their domestic economies under this idea of sustainability, right? And we need to just to agree on talking the same terms, agree on the language, and in the end is unlocking a huge potential capital to achieve the SDG goals and beyond, right? And the impact in their societies is clear. And as I said, all the learning they have got from private markets investments over the years is helping them to understand that direct investing, co-investing, even through funds, is something feasible, doable, and we just need to, let's say, bridge the capital and the needs, right? And I think it's a tremendous opportunity.
Okay, understood. Javier, I continue with you. Among the trends on the behavior of the sovereign wealth funds, also there's a change in the profile of investees. We start to see sovereign wealth funds that are investing both in more traditional companies and at the same time in startups, very innovative and not listed company in the agricultural sector, for example. Can you elaborate a little bit about this trend?
Yes. In the annual reports that we produce every year, we have been tracking all these trends like the forum is doing. And this idea of private markets investment is like huge thing. In 2007, 2008, just around the crisis, it was only 9% of their assets under management. Now it's about a third. So almost a third of their assets under management are devoted to private investments. That's, in numbers, is around $300 billion US, right? That's a lot of money deployed into unlisted assets. And they have been able to do this by exploring new niches, right? When Singapore started to invest in logistics, right, it was something kind of new. In 2013 or 2017, you have the investment of China Investment Corporation in Logicor, right? It was the largest real estate investment in the UK, more than 13 billion to buy warehouses, right? Why? Basically because they believe in the long-term trends, right? They believe that we are changing the way we consume, and we will need all these warehouses to get all these online e-commerce items that we buy on a daily basis today, right? And they continue to explore these kind of niches, right? So for example, now they are investing into data centers, right? So again, GIC, which is one of the most innovative in Singapore, deployed 7 billion agreement with the largest operator of data centers, hyperscale data centers. 2 of those will be built here in Madrid. We have seen biotech investments, a lot of them during the pandemic and before. We have seen other niches such as, for example, student housing, right? Last week, it was a 3.3 billion pounds invested in a large portfolio of student housing. Why? Because they believe more international students will continue to come to Europe, and I think here Spain has a clear opportunity, right? I think we are the second largest receiver of international students in Europe. It makes sense because everyone wants to come to Spain to study and to enjoy here. So basically, I think they have been exploring private markets. Infrastructure has been very important, but now they have switched let's say the physical infrastructure, the ports and the airports, to the telecom infrastructure, right? So now they are big investors in telecom towers, in telco companies. Of course, they have been also exploring things like fintech. Technology has been the most important sector for sovereign wealth funds over the last 5 years, both in deal count and deal value. So they really believe a lot of industries are going to be disrupted by technology. And because they have been already invested in the current champions, they want to explore what will happen with the future champions.
Thank you. Let's switch now to the geopolitical impact that in the behavior of the sovereign wealth funds in investment. Isabelle, from your experience right now, what global risks are the sovereign wealth funds taking into account before making the move and investing?
I think there is a risk to come back to brown activities, because of course it will be at the moment it's a very performant activity in terms of return, So that's one of the risks. Probability, probably profitability will be lower, so we'll have to be more patient. And I think that's one of the advantage to have a sovereign wealth fund in a country. It's to have this capacity to wait longer for return. And of course, for Europe, in Europe, the problem I see is to have sovereign fund to be beginning more cautious and coming back to traditional assets. At the moment, they are more and more investing in alternative assets, like private equity, like infrastructure, and that's a very good thing, but that's true that if it's more risky, they will probably go back to traditional activities, and probably it's less interesting for our economy, in fact.
Okay, thank you. That's related to that, Duncan. Do you think that current bottlenecks in the industries have caused that major funds to rediscover investments that maybe a few months ago they didn't think about them at all? Or it's not a movement so extreme?
I think it's probably premature to say that. I would say that what we are seeing, though, is we are seeing funds prepare themselves, and it's already here, for the return of inflation. I mean, interestingly, on the geopolitical risks, we, of course, have been here before many times. So the Iraq War, 1991, if you look at that, oil price obviously spiked. By the way, this is no good message, I'm afraid, for anybody here. If you look back further, 1979, the Iran embargo following the revolution. And if you look back to 1973, the Yom Kippur War, where the Arabs, in effect, punished America for supporting Israel. So if you look at all of those, you saw a high oil price, you saw inflation rise, and you saw a recession. So if you look in America now, rates are above 4% interest rates and unemployment below 4%. That is usually a recipe for a recession. So we have got the prospects, we have in high inflation, liable to be sustained for some time, and we have the likely prospects of a recession. So I think people are looking at those, are looking from a very macro point of view. And typically in that, the reaction is that the bond markets don't perform well. And added to that, the fact that investors, not just sovereign wealth funds, but long-term investors, with that war, have taken some short-term measures and moved out of localized currencies that have obviously been affected by the Ukraine war. So you have those kind of things going on. But on the other hand, and back to our topic of sustainability, you do have that historically, and there's no, well, that's not a guarantee, but infrastructure has performed well. It's got inflation links, typically, usually in infrastructure investment. It's got good long-term yield, all of those things. So actually, that combined with obviously the oil embargo or potential oil embargo on Russia does drive you towards the thought, actually, is that going to help accelerate long-term investment in infrastructure, and especially to make a transition towards a greener economy. So those are kind of some of the things that I think collectively sovereign wealth funds are looking at.
Okay, thank you. And Javier, do you think that in addition to those elements that the sovereign funds are looking at, there are other maybe weaker signs, not so obvious, but we should pay attention to them, and that they will affect in the long term the investment trend of the sovereign wealth fund?
Well, I think there are other issues that may affect in the mid to long run. First can be regulation, and in all these kind of nearshoring, we can see stronger regulation, and the fact that sovereign wealth funds, not only sovereign wealth funds, but almost every country is trying to build on their own security, whether it's energy security, food security, it can affect, let's say, international flows in that aspect. So we can observe a certain, going back into their international, let's say, approach. That's, I think, the way France and Italy and others, Ireland and Spain, are able to overcome these kind of difficulties by engaging directly with sovereign wealth funds. I think that's a fascinating topic, and how they are overcoming many, let's say, upper level conflicts through these a bit lower level connections. I think that's a good way to overcome these difficulties. And I think the second will be related with what we had been said already, is this approach, this strategic approach of many sovereign wealth funds starting from the pandemic, right? So many international sovereign wealth funds who have this dual mandate of developing the economy, but at the same time investing internationally, they are very clear on how can we very strategic in order to invest in companies that then can have an effect in our economies, right? Whether it's establishing R&D centers, whether it's establishing a regional office in the country. Of course, then you have the sustainability itself, right? And these countries that are oil producers, gas exporters, they know they need to transform. And these resources they are getting, these extra resources from the high prices, can be channeled into accelerating this transformation. And that's something that has been done in Abu Dhabi, has been done in Qatar, is been doing it in Kuwait and in Abu Dhabi, right? So you have examples of sovereign wealth funds, for instance, buying pipeline rights for Aramco, ADNOC, and these resources are, for instance, used for improving technologies on carbon capture, right? So the effect that we can have on reducing the emissions from these oil producers can be, huge, right? And in many cases, it's bigger than the ability you have on mitigation, right? So this ability of reducing the impact in emissions of these oil producers can have, let's say, can be accelerated in this period of uncertainty. And as long-term investors, I think they have also the ability to think beyond this crisis. And I think that's great when we see investments in education technologies, when we see investments in nuclear fusion, for example, right? So we see investments that will not be commercially viable until 89 years, right? So I think they have this ability to think about how can we transform the future, and I think that's great.
Thank you. And do you foresee, and this is for the three of you, do you foresee an impact in geographical diversification in the investment, a shift from the United States to other countries that may become more interesting for the sovereign wealth funds? Isabelle?
I think that really depends. For example, there is something that is happening, but it's not new. In Saudi Arabia, for example, you have a PIF, and the PIF is working for Vision 2030, and they already work to invest in their own economy and to transform their own economy. So I think this is not going to change. What we see is the development of sovereign wealth fund in emerging countries, and before it was mainly in developed countries, in Europe or in the US and of course in the Gulf. But now more and more sovereign wealth funds are created in Asia, but also in Africa. That's really a trend. After, perhaps I don't know, perhaps Javier will have more information or Duncan than me, but probably the risk is that big investors want to, first of all, want to invest in their own countries and to give the insurance of sovereignty and developing their own economies. But that's...
I mean, just to pick up on what Isabelle said, I mean, a couple of points. I mentioned at the start those trends and one for investing domestically. And what we have seen really across the developing world is a number of funds started which have as their capital state-owned industries and assets. So only recently, as we just had joined as associate members Ethiopia and Djibouti. And Djibouti is essentially a port country. That's, it's very small, and that's its major asset. But you've seen similar ones in the Mediterranean, the likes of Malta. Just in a couple of weeks' time, there's a big meeting going on in Africa, hosted by Morocco, which is focused on sovereign investment across Africa and organising that. So you've seen a lot on that, a lot of mobilisation of capital. And the trend really is the fact that where capital is scarce and there's limited both borrowing capacity but also a desire to borrow because of current existing indebtedness. But there is states, what countries are trying to do is unlock their capital and have it deployed more efficiently. And you see that right across the developing world. Indonesia and India, for example, have sovereign wealth funds which are focused on investing in domestic infrastructure and attracting capital into those countries. Huge markets, a huge need that they have. So you increasingly see that. On the other hand, don't underestimate just the power and attraction of American markets. So they are huge, and all the time the developing world has to compete against that 800-pound gorilla that has got a very long and successful track record of investment and returns. So it's a real challenge that if you look at it on that basis that you've got to face. But the final one I'd say is, some institutions are prepared to go to, if you like, frontier investment. You've seen it from Canadian pension funds. You've seen it from some of the big sovereign wealth funds. I've seen it, in association with the World Bank and some US pension funds as well. So there is a look into it, but currently there are a lot of challenges. There's a lot of work being done to break down those investment barriers. But don't underestimate those challenges.
Thank you. We are going to start to wrapping up, but before I would like to ask you two questions. First of all, we have been hearing about networking, strategic partnership, partnering, collaboration. For each of you, what would be the key added value of developing those strategic partnerships in your work?
Well, I mean, for me,
start first.
Yeah, I mean, we're here with COFIDES today, and Rodrigo said earlier in your opening presentation the importance of those partnerships. And I think the way that I think about it, trying to see the trend that has come about, is that actually investors, be they sovereign wealth funds, be they pure private market investors, they like to invest with like-minded institutions, people who speak the same language and have the same objectives. And despite their best endeavours, governments aren't those things. And you're seeing the smarter governments have realised that. They've created funds that will then speak that language of international capital. And that's why you're starting to see more co-investments across the piece. And from a sovereign wealth fund perspective, especially those big savings funds, by investing with other sovereign wealth funds, they're like-minded institutions that have similar challenges and obviously similar owners. And so there is an understanding of that. And there's a trust that they can build over time. So that goes on. So they can also, there's a give and take there. Some countries need more investment. Others have, if you like, excess that they're looking for a certain return profile that they're prepared to channel into those investments.
Thank you.
Yeah, I think the sovereign wealth funds are increasingly being able to establish this kind of win-win partnerships, right? I mean, on the one hand, you have excess investment capacity in many countries. Sometimes there are small countries, such as Singapore, that they don't have much opportunities at home. They can explore beyond. That's the case of Norway, right? Norway, despite they are not doing private, they invest no money into Norwegian economy. So one part of this basically natural resources-based sovereign wealth funds is just to avoid Dutch disease and to avoid overheating of the economy. So it makes a lot of sense to them to explore beyond. And as I said before, I think these partnerships are able to even overcome regulatory concerns. They also help domestic or, let's say, receiving countries to guide the investment into those sectors that are more important for the country, more strategic for the country. We are thinking here on sustainability, but beyond, on employment or job security or in improving infrastructure. So if you're thinking, I mean, you were mentioning before the geographic change. For the first time in our 10-year series report, India, China, and Singapore have received more investments than the US, right? So we are seeing this change, and part of this is related with the existence of these domestic strategic sovereign wealth funds that are able to create the legal structures, the financial structures that attract international money, that is more or less guided into the complexities of the national economy. So I think this trust is so important. And I guess the other advantage of sovereign wealth funds is the long-term investment horizon, right? So it's super attractive for many types of projects. So when it comes to infrastructure, but also private equity and also deep tech or deep, let's say, science projects, right? They really require patient capital that is there for the next 15 years. And that's great when you are designing the change in the economy or the transformation of one economy, right? You don't think in the next 2 years, you just think in the 10, 15 years. So I think they are well aligned on that front.
And yes, and I think that the more we'll work together, the better it will be for the economic and the companies we finance. And I think that there are several ways to cooperate. Of course, it's we can cooperate under the auspice of organizations like IFSWF. That's very, very important because it's always a place where we can meet each other and begin to understand and to know each other and to build the trust, and that's very important. But we can co-invest together by signing MOU. We can have a common vehicle to invest. For example, we have one with QIA. We have a specific vehicle to invest together in French companies. Or we can also subscribe in the fund that another sovereign wealth fund is managing. So a lot of ways to collaborate, but that's true that what is very important is the trust. If I take the example of our collaboration with Mubadala, it has begun with a simple co-investment MOU in private equity in France. And we have made another one, but in tech, to co-invest in tech. And then recently, they have 2 years ago, they have subscribed in our fund called Lake One, which is a 5 billion euros fund to invest in French multinational, listed French multinational companies. And they did it because it was interesting for them, and because, of course, it's always a matter of states talking together. But it's because we have built a strong relationship and we trust each other, and that's very important. Okay. I think that to build relationship between the sovereign wealth fund is also on the long term, like our investments.
Okay, and so may we leave the room this morning with the idea that sovereign wealth fund will be a key partner to overcome the challenges that our economies are facing nowadays, that they will help us to transform our productive structure and to help us growth. Do you agree? Or
Totally agree. Yes.
Yes, but not on their own. So there's also assistance needed from other investors and also the right policies from governments as well.
Understood.
That's why government is so important.
Yes, this reciprocity I think is important. Many times we think in the, regulations that have been growing in Europe, in the US, on, let's say, screening, restricting in the origin of money. but it should be the other way around too, right? So, I mean, sometimes they feel like there is no reciprocity on that front, and I think the regulatory point will be so important. And as Duncan was saying, we tend to think that sovereign wealth funds, because of their big size, they need to be solving the problems of the world. I mean, that's something that is undoable. I think it's SDG 17 is about partnerships. We really need to build partnerships. And on that front, to have this patient capital, professionalized and talented management, I think it's a great opportunity. Also because you have the investors, but at the same time, you have sovereign wealth funds today that are developing already their own countries, right? So I think bridging the two, I mean, will generate a lot of progress in many societies, and that's great.
Thank you. We are arriving to the end of the slot allotted to this panel, but before saying goodbye, let's see if there are any questions from the audience, maybe? Yes. Please.
Well, I want to give a small note on New Caledonia, for instance, right? They are one of the largest exporters of nickel, right? One of these minerals or metals that will be used a lot in the electrification of mobility in the future. They are considering creating a sovereign wealth fund based on nickel directly. And they know that they cannot do it without following standards that are, let's say, aligned with what is expected in recipient countries that will receive all this raw material, right? So they are now more than ever engaged into the international arena, right? So sovereign wealth funds and any other state-owned enterprise, any private company, they know they need to play at the same, let's say, level. So I think many, particularly if they are long-term investment projects in mining, for instance, if they want to be successful, not only in terms of returns, but also in terms of being able to access to certain markets, right? Whether they have, in the future, maybe some clients that will refuse certain resources when they are not coming from certain standard management. I think they have this opportunity. Their own, I mean, thinking Guyana, they are now extracting a lot of oil. So there is an opportunity to really engage into extracting, into mining in a sustainable way or in the best practices way going forward. For sovereign wealth funds, this can be another opportunity. They have been doing that in the past, right? They have been investing in minings, in certain metals in the past, in Africa, in Asia. I think, I mean, there is ample opportunities growing, as you mentioned, in all these new natural resources that will be used today, substituting oil in the future. But I don't know if you have different views.
Well, not at all, no. I think the only thing to say is, I mean, I'm due out to be in Mozambique in a couple of weeks to speak to, Mozambique has got a huge gas field, nearly 100 billion by current valuation, that it's due to start pumping fairly soon. And then the surpluses will flow into a sovereign wealth fund. And to have a discussion about the governance and the mandate of that sovereign wealth fund and what's best to spend that. The question of their managing their resources directly is a different question, and it's sovereign wealth funds are what's done with the excess, if you like, or the revenues that come from that. And that is a different question, but there are other things, other organisations that do address that. But there's not a great track record in a number of countries, I will say, across that. So it is something that does need very strong governance. And so I don't disagree with the point you're making, but that should be better. And, there is that opportunity to make it better. But that does primarily rely on governments putting in the right structures and the right governance for the extraction of whatever those natural resources are. And that is not universally well done.
If I just can add one thing, I think your question is really, really important, and it's really important to address it. I think that as France and Spain, and of course we should play at the European level on this subject, and for sure associating our neighborhood. As BPA France, we are not really we have not really the right tools, because our objective is to finance companies and no infrastructure. In France, there is another public company called Caisse des Dépôts that can invest in infrastructure. But I think that's, of course, it's a subject that sovereign entities have to address. But it's so important, so big, and so strategic that I think that we have to work together to have more importance and more impact. Probably the European level is a right one.
Thank you. Thank you, Isabelle, Duncan, and Javier, for participating in this conversation. It has been a great pleasure having you here this morning. And to the audience, thank you very much for your interest.
Thank you.